COTI added wrapped Ethereum to its privacy layer. So now private transactions for Ethereum are possible. Everybody missed it up until recently. Now COTI is outperforming. We've also got automated trading through AI agents that are now possible on the COTI network. And the privacy narrative in general tends to perform very well recently. For example, we had the run-up in Monero or the run-up in Zcash. Now, since COTI is much smaller compared to Monero or Zcash, is there potentially some upside here still after this rally? Let's have a look at the on-chain data, the data most people aren't considering. Hi, my name is Gerhard. I've been in the crypto space for the last 8 years. I hit my first million 3 years ago, and it is mainly through active trading of altcoins. My track record is on the website, linked down below. In the last 2 years, that's when I started publishing my trades in real time, we made 47% per annum. The current open trades are of course available to the premium members, but all the closed trades, they are published in real time on this website as well. So I'm 100% transparent. You can have a look at all of those trades. I don't know many people that are willing to go that far with transparency. Now, COTI is a privacy layer that now integrated with ETH. But it seems like X, formerly known as Twitter, is mainly discussing about technical analysis. Now, the problem with many of those analyses is that it's just US dollar charts. And the problem with US dollar charts is that they are highly dependent on where crypto as a whole is going, right? When Bitcoin is going up, most altcoins go up. When Bitcoin is going down, most altcoins go down. That's a problem because we want to make a decision specifically about COTI. Does it make sense to get this additional risk to buy a small altcoin over, say, buy Bitcoin? It's rather a question of opportunity cost. And so when we just look at a US dollar chart like this and we predict a potential outperformance of 800% just to go back to the equilibrium price, that's the dotted line over here, then that's not necessarily very realistic. By the way, if you use X, then feel free to also follow the account of this channel. I publish data regularly over here. Make sure though that you follow the right account, so that's at BitcoinStrat. Make sure that you don't follow any fake accounts. So when this here doesn't work, what does? I think a chart like this is much more useful. So we're looking at COTI divided by the others market cap. The others market cap is all the altcoins that are not in the top 10. This way we get an impression whether or not COTI outperforms or underperforms at a given point in time. Now, in the last months, COTI unfortunately underperformed. Every now and then we get those rallies, but they tend to be short-lived. The question is this just another short-lived rally? And are we going to go down in the same way we did before when those rallies occurred? Now, even if we were to go down from here, that's still a potential opportunity, right? Because in crypto, we don't necessarily always have to buy. We can also bet on falling prices of an asset. So if COTI goes down, we could just short the token and take advantage of their price depreciation. But in order to make that bet, we first have to understand, why did we go up in the first place? And could there be a potential continuation of that rally? Now, what triggered the recent rally is a tokenomics update. That already happened a few months ago, but it changed the fundamental dynamics around the asset. We had very strong token inflation up until April of this year, and that token inflation is now completely gone. The reason for the long-term underperformance was token inflation. But now that the supply stays flat, potentially even goes slightly down due to a burning mechanism, this long-term negative trend might actually revert. That's very similar to what we have seen with Zcash, right? Zcash had very high inflation because it just mirrored Bitcoin. It didn't get the same demand as Bitcoin though. And now the inflation rate for Zcash is manageable, and now it's able to finally outperform. There is a chance that COTI will face the same development. Now that the circulating supply does not expand anymore, this long-term negative trend could actually turn around. If, of course, the reason for this rally was purely buying for the long term. As in spot buying, no leverage, no short squeeze. Because that's the alternative explanation. One reason for those quick appreciations and subsequent declines is that many people were betting on falling COTI prices. And then the market makers every now and then induce a short squeeze. So the market makers bet on rising prices while the retail investors bet on falling prices. And then the market makers buy up the supply on the spot market. Once there is enough interest in falling falling prices, then it's worth it to buy up on the spot, manipulate the price, short squeeze all of the people that bet on falling prices, get them liquidated, and then afterwards sell off the supply long term. That's what tends to happen with COTI, that's what tends to happen with many other altcoins as well. That's why we get those short price spikes and subsequent declines regularly. And the question is this just another one of those short squeezes? Or is the rally driven by demand due to the tokenomics updates? Now let's have a usage of the protocol. That's over here. That's the total value locked. How much capital is currently on the COTI chain? And unfortunately, that's not going up. And that's one of the main issues here. The supply not expanding anymore is great. But if the demand also does not expand, then we still don't have a rising price, right? It's always about the delta between demand and supply. If there's more demand than supply, the price goes up and vice versa. Let's have a look at what happens on the spot market. So let's go to Ethereum. We've got roughly 29,000 holders over here. And let's see what kind of holders there are. On the left side, we see the number of wallets with at least $1,000 worth of COTI, or 80,000 tokens. So the number of retail investors, that tends to go up. In the middle, we've got the number of medium-sized investors. So we go at 10x from the left chart. So it's $10,000. On the right, it's $100,000 worth of the token. The largest wallets, the whales, they tend to accumulate the least consistent. In the last 24 hours, we had 17 million worth of trading on the spot market, but on the perpetual futures market, we had much more than that. 244 million worth of trading volume. Now, why does this matter? It matters because when there's a lot of trading on the perpetual futures, on the levered bets, on the derivatives market, then we can potentially manipulate the price much more effectively on the spot market. If spot is very illiquid, just a few dollars moves the market caps massively, and that then has an outsized return on the perps. So here is the funding rate of COTI on the perpetual futures over time, and with the recent rally, we saw this go massively negative, as in many players got liquidated. We can also see this here in the liquidation chart. A lot of shorts that exited, and that hints towards a short squeeze, very comparable to what we had in November of last year. When the spot trading volume is modest, the usage of the chain is going down, and probably this is not a long-term interest triggered through the tokenomics change. It's rather that people saw the long-term declining price. Many retail investors bet on the falling price, and now a few whales are manipulating the price to the upside, which caused liquidations, which also caused gains for those whales because they take the counter position, right? They bet on rising prices. And another indication that that's actually what's going on is the open interest. So the amount of bets on the price. When there's a lot of leverage in the asset, the price tends to be up. Once that leverage goes down, the price tends to follow as well. And this time we've got a lot of leverage. Once that reverts, then the price will fall. This is my base case. Now the art here is to figure out when are we going to turn around, because sometimes those short squeezes can last for quite a while. And so what's important here is risk management. If we want to bet on a falling COTI price, there's several ways to do this. We could, for example, just wait until we start to decline, and then after a few days enter the short. Or we could potentially just have a very tight stop loss. We enter the short now. If we get stopped out, that's fine. We just enter another short. If we get stopped out again, that's fine. We just enter another short. And then at some point, the rally will stop. And then our short will make up for all of the prior losses. That's an alternative strategy. But there needs to be some kind of risk mitigation because those short squeezes can last for a while. This is, by the way, how I make most of my money. That's why my altcoin trading track record looks the way it does. I do a lot of those relative valuation shorts. So for example, here we shorted near relative to Bitcoin, or over here maybe we shorted Luna, but that was also relative to Bitcoin. A lot of those relative valuation shorts that make money. So let's have a look at layer 0 over here. That was a nice money maker. You can just click here on those dates, and then we get the Telegram messages. All of those trades can also be sent via email. And here we had a similar setup, right? We had a rally in layer 0 in a long-term trading range where the price tended to decline. That decline was due to tokenomics. The number of tokens went up over time. That was on the 2nd of April. And then we closed that position 1.5 months afterwards, right? When we went down on the trading range. So there's no surprise here, right? When something is highly inflationary, it tends to go down. Unfortunately, COTI is not inflationary anymore. Still, I do think that this is short-term leverage that just entered the asset, and that leverage will exit soon. In other words, I think it's highly likely that the price will revert again and COTI could potentially fall by more than 40% from here. And then the long-term trend might take over, it might not. I don't want to bet on the very long term. I think it makes more sense to bet on the short term in this asset. Now, unfortunately, I cannot share the current open trades here in YouTube. But linked down below, there is this website over here. It has one of the premium trades that I currently hold, that many of the premium members hold as well. You can get that trade 100% for free. There's no payment needed. There's no credit card needed. You can either get it via Telegram, so you click on this button, or you scan this code over here. Or if you don't have Telegram, you can also just enter your email and then click here. Then you will get that premium trade sent to your email. You don't just get the position, you will also get a tutorial video that explains everything, how to set this all up, how to manage the risk, etc. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time. Cheers.